Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin recovered all post-election gains and briefly touched $60,000 before rebounding to $70,911. Markets experienced a $2 trillion sell-off as dealers hedged structured products, whale liquidations cascaded, and spot ETF outflows accelerated. The crash was driven by multiple coordinated forces. Bitcoin fell approximately 16.5% over 7 days, but the broader market suffered worse. Ethereum dropped 22.4%. Solana fell 25.2%, touching $75 before recovering to $88, and XRP declined to $1.15 before bouncing back to $1.45. BitMEX co-founder Arthur Hayes attributed much selling to dealer hedging tied to BlackRock's Bitcoin ETF structured products, which saw $10 billion in trading volume during the crash. Spot Bitcoin ETF flows turned sharply negative, with approximately $1.25 billion in net outflows over 3 days. Despite the pain, on-chain data shows broad accumulation emerging. Glassnode's accumulation trend score climbed to 0.68, the highest level since late November, signaling synchronized buying across all wallet sizes. Investors holding 10 to 100 Bitcoin have been most aggressive with dip buying. BTIG's Jonathan Krinsky pinpointed $60,000 as a tactical low, noting Bitcoin would need to reclaim $73,000 to confirm a sustainable bottom. The 200-week moving average around $58,000 represents a cycle bottom anchor where long-term capital has historically re-engaged. Market depth declined significantly, falling to approximately $5 million from over $8 million earlier in 2025, contributing to more abrupt price movements. Bitcoin's current mining cost sits around $67,000, indicating miners are under considerable stress. Meanwhile, XRP reached historically oversold levels with a relative strength index of 20 on the daily chart. Analyst Ripple Bullwinkle noted that every time XRP has entered similar territory, a price bounce of approximately 15 to 40% has followed within 2 weeks. Whale accumulation data supports recovery, with approximately 1,389 transactions of $100,000 each occurring during the dip. Ethereum funding rates signal a sentiment flip across major exchanges. After deeply negative rates earlier in the week, BitMEX funding reached 0.049%, the highest level since October, indicating aggressive long leverage. In regulatory developments, Japan faces a critical election on Sunday that could accelerate crypto reforms. Prime Minister Sanai Takaichi seeks to push through tax cuts from 55% to 20% by 2028 and launch crypto ETFs. Vietnam proposed a 0.1% transaction tax on crypto transfers through licensed providers, with a 20% corporate income tax on trading profits. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.